Everybody, and welcome to episode 28 of Bank to the Future Live. Hopefully I'm right with episode 28. I'm losing count now. Today we've got lots of updates to give. We're not doing an interview this week. We're just focusing on some of the updates and things that we're going to update the community on with regards to Bank to the Future. For those of you that might be new to Bank to the Future Live, this is our weekly show where we cover all things that our investor community and fintech community want us to cover. And so we go through the latest updates, interviews with companies that are pitching on BnkToTheFuture.com and cover all of your topics. And it's your opportunity to get your voice heard and ask us questions. You can ask questions in a number of ways. You can either use the live chat, and we have Famida here moderating. She'll be going through your questions and picking out things for me to answer as we go through this. You could also do the same in Telegram. We set up our Telegram channel during the Bank to the Future token sale launch. And so the Telegram channel is at BF_token if you want to engage with our community there and ask your questions. Or you could go to Twitter and use hashtag BFLive. Or this should be streaming on Facebook, YouTube, and Twitter, and you can just use the live chat. If you're watching a recording of this, then please do leave your comments here, and we will endeavor to pick them up and cover them next week if we have time from the questions that we get asked. So we've got lots to cover today. We always try and keep this to a maximum of 1 hour. But please do let us know as we go through this what your questions are so that we can cover them. The main topic of today is addressing a situation which happened at Bank to the Future, which we've had a lot of feedback from our investors, and we've heard your feedback, we've taken action, and we'd like to update you today on exactly what we're going to do with regards to the withdrawal fees and a breakdown in communication at Bank to the Future with our investors and our community so that we can bring that topic up and address it immediately on this show. And that will be followed by a blog post where we can put together more details on everything I cover during this live broadcast. We can also take some of your questions and any suggestions you might have as well. And then we'll cover those. So firstly, let's just jump into some of the updates and some of the things that we've been working on. Just going to pull up my show notes. So a few updates. Obviously, for those of you that invested in Kraken, Kraken was our record-breaking round where we had over 2,200 investors syndicated together into our SPV in order to get exposure to the growth of Kraken. And we've now issued the share certificates. We really thank you for your patience. Apologize for the delay. We had a lot to do in order to get this over the finish line compliantly and get all of the US investors signed off by our broker-dealer partner and everything we needed to do in order to make that happen. Some of you, if you didn't provide the documents that we requested, then some of you might have actually received a refund, but we would have updated you before that. And we contacted you several times. So if that was you and you're in that situation, please do check your email, get in touch with support ASAP, and we can see what we can do to accommodate if you can provide the missing documents. But that only affected a few people. There was approximately 10 people out of the whole 2,200. Everyone else has received their share certificates. And we will be going as soon as the lock-in period is through, which for those of you in the US is a 1-year lock-in period. For non-US, we have to do a minimum of 3 months. We'll also be able to make those available for you to place an offer on the secondary market should you wish to do so. But for those of you that are in it for the long term, as you should be when you're investing in high risk, high return private equity, then that won't affect you too much. But the secondary market is currently open for those that invested in the earlier round and will be open to those that invest in this round in the coming months, unless you're from the US because we have to adhere to that 1 year lock-in period as per SEC guidelines and requirements when doing offerings such as this. Remember, at the moment, due to a regulatory restructuring, we've had to change our escrow account provider in order to comply and be able to open it up to a wider audience. This means that at the moment, card payments and direct bank transfer investments on pitches is not open on the pitch as it usually is. And that's because we're switching away from our normal card payment processor. For those of you that don't know about the intricacies of the banking and crypto industry, it is a very challenging thing for anyone that's operating within the crypto, blockchain, Bitcoin industry to have merchant processing partners, to have bank acquiring partners. And unfortunately, due to the friction, we tend to get charged a lot higher fees and have to switch frequently and put in lots of procedures to protect against the legacy banking system and their wars and attacks on the crypto ecosystem. So we are making a few more switches to protect ourselves further, but unfortunately we had to take away card payments, and that has obviously affected some of the people that prefer to not invest with crypto but prefer to invest with card payments. But we're doing an integration. We'll look to bring that back as soon as we can. However, at the moment, we have completed our integration into fiat-based deposits. So if you want to invest with fiat, then you can actually complete a bank wire. You can head over to the fund section of your account, click there to deposit, and you can still send a wire transfer in. That will get credited to your BnkToTheFuture.com account, and you can use that for investing in any pitches. And there's no transaction fee if you do it that way as well, because we don't for that particular service is completely free to deposit. Even though we get charged a fee, we're covering that at the moment for those deposits. So you can go through that way in order to do that and invest in a pitch. Card payments will update you on future episodes of Bank to the Future Live once we've completed the integration. There's a lot of regulations around doing that, like PCI compliance, in order to complete, to ensure that your card payment details are protected, safe, and secure. And we meet those regulatory requirements as well to keep you safe when transacting through card payments online. So you can do that through the fund section of your account. So the only thing that's affected is card payments, but they will be coming back soon. Also, we're completing a restructuring so that we can open up to US investors on future deals. At the moment, that is not open until we have completed the restructuring and updated many of the systems. So unfortunately, US investors won't be able to use the platform at this stage, but we're completing the next phase of our integration, and we'll have some upcoming announcements on that as well. The other thing, the main topic of today is obviously we're listening to your feedback with regards to an incident that happened on our side with regards to withdrawal fees. And I'll be jumping straight into that and going through and giving you a much deeper explanation and also a list of next steps and actions that we're going to take in order to make sure that we're listening to your feedback and doing all we can to support the community and correct mistakes when we make mistakes. We completed our very first test trade of Bank to the Future token against Ethereum on the new Bank to the Future exchange. We recently acquired altcoin.io, which is a decentralized exchange. And we're looking at integrating the exchange into many of our systems to make it easier for people to actually acquire Bank to the Future tokens, use Bank to the Future tokens in order to do much more interesting trading. And then that allows us to do the next phase of features that we would like to do for the Bank to the Future token ecosystem. But we completed a beta test of our very first trade, and I'll show you the user interface that we're working off right now. And we're also working through, the marketing team are working through the rebranding, and we'll look to update you on that in future episodes of Bank to the Future Live. In terms of pitches live, congratulations to Brankus. Brankus just closed their Series A round. They have raised just over $5 million in 3 days with the co-investment from the lead investor. And so Brankus is doing a great job of creating open API-based banking in countries like Indonesia, that have, not many in Southeast Asia anyway, where their banking system is looking to catch up due to the main effect that most people are using cash in economies like Vietnam and Indonesia that have, less trust for the banking system than we do in Western countries and other countries around the world. In terms of pitches, so Brankus has been and gone, that closed in 3 days. Concrete, we've just launched. We had the interview with them last week. They're looking at securing their lead investor at the moment, and we'll be opening up relaunching it. We've put all of these pitches on extended deadlines due to the fact that not all the payment methods are available. You can still invest with crypto. You can still deposit to the fund section of your account, but not all of the payment methods and the US markets are open at the moment. Concrete are a real estate equity crowdfunding platform that say that they have done about $40 million in real estate deals online for 25 developments, and they're looking at going into the tokenized security market for real estate and other products. DX Exchange, which has an exchange which is regulated in the European Union, are set to announce, no guarantees, of course, because it's subject to regulatory approval, but they believe that they're just around the corner from announcing an MTF, which is the license that you need to operate a full-blown exchange in Europe. And they have cryptocurrency products. They have new smart tokens that allows you to trade on leverage without actually having to borrow funds, and is built into their token, which is really interesting. And also the ability to invest in stocks and ETFs through tokenized versions of those stocks and ETFs. We look forward to pushing those a bit further once all the payment methods are around, but you can invest with crypto, you can deposit to the fund section of your account and invest that there. We also have Edge, which is formerly Airbits. They're doing their Series A round, and they've opened it up after BitMEX Ventures and Fembucci Capital, very prolific crypto investors, have opened up their round. And we're working with a few other deals, but we're probably going to wait until we get the other restructuring and new releases of the platform until we actually release those. In terms of the secondary market, we've now got the blockchain.com SPV, we've got the BitPay SPV, we've got the Kraken SPV, we've got the Circle SPV, the Bitfinex SPV, and the Ripple Labs SPV. So these are all the largest, most established brands in crypto. If you miss their funding rounds from the history of Bank to the Future, then you can now build a portfolio. That's the secondary market, where it's some of the more established companies in crypto. Those are the deals that we've got listed at the moment. We're still in beta with that at the moment. We've got a few more things that we want to release until we come out of beta. And remember, if you have Bank to the Future tokens and you want to buy and sell on our secondary market by using Bank to the Future tokens, you can get a 50% discount off those trading fees. So before we go over to some of the questions and portfolio updates, I wanted to go through the main topic of today, which is addressing the elephant in the room, which is we had lots of feedback from our investors due to the introduction of a 1% withdrawal fee for withdrawals on Bank to the Future. And what I'd like to do is really go through some of those, our thinking behind the situation, what we did wrong, what we're going to do next, and we'll go through that with you. Firstly, for me, I don't have the link on me right now, but if you're able to find the link that outlines the coin payments fee page, where it shows the 1% fee, I just wanted to pull that up on the screenshot, but I don't see it in the show notes at the moment. So if you could chat to someone and see if we can make that happen, that would be great, just so I can show you, so that we're transparent with everything here. So Famida will arrange that for me and add it to the show notes, and then I can pull that up. So the first thing that I want to go through is there was a communication breakdown at Bank to the Future. It's not our finest moment. We have got things definitely wrong at this time, and we're setting about correcting that. And that is that we have been in the process of automating all of our deposit and withdrawal process. To help you understand the history, we had payments on pitches, and when we opened up our secondary market, before we come out of beta, we wanted to automate the process of deposits and withdrawals. Unfortunately, due to the fact that we are a securities business rather than a crypto exchange, we have to adhere to a higher standard in terms of regulatory compliance, because we are in a regulated field rather than a regulatory gray area like cryptocurrency exchanges. That's going to change, but the situation is that we have to adhere to a higher standard, which means in order to automate it, we had to find new banking partners, new crypto payment processing partners, and we had to integrate that with all of our KYC AML requirements, all of our security law requirements, and we had to get it whereby we could do KYC on the go, transaction monitoring, all the things that we have to do that the customer doesn't necessarily care about, but the things that we have to do. This increased our costs significantly because we had to start using third parties, and new regulatory requirements as well have been introduced whereby we have to escrow through third parties. So we were looking at how we can do this in the best way. So the strategy we went through is that we integrated with our deposit provider to do automated fiat deposits and automated crypto deposits so that we could significantly increase the speed. And we've started working on our Bank to the Future identity solution, which significantly increased the speed in which you can complete our know your customer and transaction monitoring things that we have to do, that all cryptocurrency exchanges are going to have to do, as the Financial Action Task Force is now putting more of a regulatory clampdown and the standards that they have to meet. But essentially, we made all these changes and we had a rollout process. The idea was that we were going to automate the deposits first, and then we were going to release automated withdrawals. When we release the automated withdrawals, we haven't changed our policy in any way, which is that we pass on our third-party payment processor fees. But the payment processor fees that we have to use in order to meet this new automated requirement has meant that we've had to introduce a new fee. The new fee was a 1% fee, which was not communicated well at all because it was released ahead of schedule. So the idea was that we were going to do automated deposits, then automated withdrawals. Due to a communication breakdown that we're explaining right now, the 1% withdrawal fee that we were going to communicate, give effective notice, and do everything we can to ensure that people could withdraw their funds before that withdrawal fee applies, was introduced into the release of the last platform, and therefore there was very ineffective communication. And we found out about it when our customers started complaining about it, saying, "Why wasn't I told?" Which is a completely valid complaint. We put our hands up. We released a page that explained our fees, but we certainly didn't give the notice periods that one would expect, and meet our transparency requirements. And I think a lot of our investors have very valid concerns that we want to address. So what happened is the automated withdrawals wasn't released, but the 1% fee on the platform was released. And so there was no effective communication. Therefore, we're doing what we can right now to rectify that situation. So I'll go through what we are doing and what the next steps were. But I just wanted to help you understand that this was a communication breakdown. This is not the standards that we hold ourselves to. This is technology, marketing, myself, who ultimately has to be responsible for these things, not communicating in an effective way, things getting released without us being able to communicate that in an effective way. So a bit more background. People have criticized us as well, stating that you should be building your own payment system. You shouldn't rely on a third party. For regulatory reasons, we have a requirement to do that. And secondly, as an investor in all of the exchanges, you may not know that an exchange is using a third party, but the majority of the ecosystem are using a third party. For example, BitGo is the largest provider of such automated deposit and withdrawal, multi-signature, cold storage, hot wallet infrastructure that many of the exchanges use. It's just you as a user don't necessarily know that. So most exchanges are using third parties. We know that because we're shareholders in them. And BitGo is the main company that has got like market dominance in terms of providing those services for exchanges. So it is the best practice and common standard for exchanges. And we're not quite an exchange. We've got a secondary market, an OTC market, but it is a common practice, just so you're aware of that, that people do use third parties. And there is regulatory requirements around that as well to separate funds, increase investor protections, escrow them in the correct way in case there's any complaints and various other things. So those standards it is a best practice. It's not something we just do. It is something the industry does as well. The other thing worth noting is that sorry, my show notes are moving around a bit as we're adding the links. Is that people criticize us saying, well, you've created the BF wallet, which is all automated. How come you can't do that at BnkToTheFuture.com? Perfectly valid complaint. To explain our systems, we do have separate teams. We have a new team that is working on the Bank to the Future exchange. Their main talent is in blockchain. We have a blockchain team working on the BF wallet, but BnkToTheFuture.com was never designed to be, a crypto business. It's a securities business that deals in equity. And we have, over our time of starting very early, had to adjust to all the innovations and things that have happened in the crypto market just when delivering, tokens to those that invested in token sales. That was never our plan. We were always an equity platform. We were always a securities platform. And then we've also were one of the very first merchants in the world to start accepting Bitcoin payments. And so we have legacy systems that we have to update over time. But yes, we should have a tighter integration between our wallet team, our exchange team, our BnkToTheFuture.com team, and other parts of our team to share some of their skill sets across the different applications. And that's something we'll certainly be working on in order to improve that, so that some of the more blockchain-based talent that we have within our organization is also being utilized in other applications. And so that's something we totally can improve on. The other thing is people said that, well, coin payments do not charge 1%. I would like to share a link. They normally charge 0.5% on some certain payments, but if it's an ERC20 token, they charge 1% for Ethereum based upon Tether, and Bank to the Future token, which were the main ones that we were using for our integration. I will share the link. I think the team have been adding that. I'll just check my show notes to see if I can do that, and then I'll share that as a link when we go through the screen share. So it's not that we were charging a markup on top of coin payments. Our policy has always been to pass on the third-party fee. It's not something we are trying to benefit from. But this just wasn't executed in a good way. So that is, we wanted to use coin payments because they are a Bank to the Future portfolio company. They were set up to do merchant processing, and they do merchant processing for some of the large company relative to what Visa and MasterCard charge a merchant, which is anywhere between 2.5% if you're a low risk business, and up to 5 to 10% if you're a higher risk business, and anything up to beyond that for the companies in crypto. You'll notice that the minimum card payment you can get for a crypto business is that Visa and MasterCard and the acquiring and merchant in between will charge a minimum of 5%. Coin payments charge 1% for crypto usage, for those that don't want to go through the whole process of using crypto as it was designed. So in crypto world, that is very expensive. In traditional merchant processing world, that's beating the market. But, and that is their business model. However, we have been speaking to the coin payments team. We have been explaining our situation. We have been explaining the feedback from our investors, and we are in the midst of coin payments seeing what they can do to help us out with those fees so that we can continue using the service. And we will give you updates as that conversation goes, so that we can try and get a better rate for that. The other thing is, because of our breakdown in communication, because we didn't do this to the standard that we would like to have done this, and because we didn't give the sufficient notice period, because we released it earlier than our team was able to communicate that, we're going to actually implement a change where we need to separate the fee for fiat withdrawals from crypto withdrawals. It was kind of, at the moment, it's implemented as a blanket withdrawal fee across all the fund section. We need to implement some changes to separate those fees so that we can charge different fees for different cryptocurrencies, because we never built it that way in the first place. We have asked our team to prioritize that, so that we can adjust those fees based accordingly. And within the next couple of weeks, ASAP, we'll be giving you updates on when we can actually make that release and change. The other thing that we have decided to do as a team is we have decided to pay all of those fees for you in this time period. So anybody that has requested a withdrawal, we will be depositing to your account the fee that you actually paid, because we didn't give you sufficient notice. And we had this internal error on our side. So nobody that has paid that 1% fee will be charged that 1% fee. It's not in your account yet, but we'll be making a manual update to that, to deposit the fee back to your account, and refunding that 1% fee that was charged. And we will also be sending you an email update and an email notification as soon as that has been done and complete, which will coincide with when we release the new update to the platform to be able to adjust that fee accordingly. The other thing that we will be doing is we will be, eventually we will have to introduce that fee, but it won't be 1%, because we have an agreement from Coin Payments to work with us. We haven't fully completed the negotiations, but our goal is to get that fee significantly lower, so that we are only charging on any third-party fees, as opposed to the larger third-party fee, because we do not want to make any markup on the withdrawals. Our business model has always been simple. It is 5% of the funds raised to the issuer where we can, and 5% on any dividends, and 5% on any exit proceeds. We don't charge management fees, even though we get charged those. We don't charge the fees for deposits and withdrawals, even though we have to pay astronomical fees to automate these things with our banking partners that are very much, they charge very high fees. It's not normal banking for normal people. And the merchant processing fees, we'll look to make sure, if you invest in a traditional fund, you always get an average of about 20% carry, admin fees, fund management fees, and all the other things. That we do not charge any of that. We only charge our simple model. And we have always charged on any third-party payment processor fees. The challenge is we didn't communicate it effectively. We released it before we should. We put our hands up. We made some errors there. So we're refunding everybody. But there will be eventually a withdrawal fee. It will be less than that 1% due to the fact that we are going to try and get the best rate we possibly can. But when we do that, we will certainly give you a notice period so that you can make those withdrawals. We'll give you sufficient time frame, and we will communicate way more effectively than this error that we have made, and make sure that you are 100% in the loop with regards to what's happening, so that we can correct that. But there will eventually be, we will still have to pass on those third-party fees. The transition period is that we are going to cover all of those 1% fees. We'll pay them ourselves from the time that we introduce the 1% fee till the time that we release the new updates to the platform, where we would have taken away those fees until we've given you a notice period and given you an effective communication. So we hope that that is a satisfactory solution. We welcome your feedback. You will not be paying those fees, and we will give effective communication before we introduce any fees, and will ensure that we get those as low as we possibly can in an environment where, you know, as regulations is increasing, the cost to compliance is increasing, and most companies are going to be introducing, even if they don't have deposit and withdrawal fees, it will lead to increases in trading fees and various other things, because it's due to the nature of compliance, and compliance becoming a business in today's day and age, unfortunately. And we have to figure out effective models for doing that. We welcome all your feedback as well. I think I've covered most of the points. And those are all the points I wanted to go through. So hopefully, if you've been watching this, you would have got some questions for Famida. I can try and address those. In terms of other updates, I am going to now move to a screen share, go through the portfolio updates so that we can then go through your questions as well. So just give me a second while I try and find that link I was looking for as well. Got it. Okay. And now I'm just going to move over to a screen share so that we can go through the portfolio updates, and then we can take some of your questions. So hopefully you can see my screen right now. I'm going to turn my camera off so that I can go through this. And Famida will let me know if for any reason you can't see the screen. So here's the coin payments page. I know that most payments are 0.5%, but here's the link. We'll add it to the description. You can see that there is a 1% fee on the Bank to the Future token, and the Tether is a 1% fee as well. So we just want to let you know that we weren't just trying to make a markup, but as coin payments have committed to trying to get us a better rate, we will update you on that. And in the meantime, as stated, you won't be paying those fees. We will be refunding them all, and we will be implementing effective communication. In terms of other news, here's a little glimpse at the first Bank to the Future token ETH trade that we did on the beta platform. Really looking forward to bringing more from the Bank to the Future exchange team. And here's just a little sneak peek for you of what I was talking about. Remember, in terms of the pitches we were talking about, Brancus is now closed, the Series A, but you can see Concrete here, you can see Edge here, and DX Exchange. Crypto investments only at the moment, but if you do want to make a bank wire, I'm not signed in, but you can head over to the fund section of your account, and you'll be able to make an automated deposit there and invest that in those pitches. We also have an update for the Telegram investors. We were one of the only people before the wave of extortionate IEOs that have been coming out selling on their Telegram tokens recently. But we were one of the only ones to be able to do that. They're getting ready for the launch of the network, and they're trying to get ahead of Facebook, obviously, in doing that. So we look forward to being able to deliver those tokens to all the Telegram SAFT investors as soon as those become available. Also, another one of the token sale opportunities that was put on our platform via a SAFT was PNDX. They've made an update here that they will be installing 49 different retail stores across Venezuela, which is a really interesting market at the moment. And so we look forward to seeing what they will be doing. Other than that, we just had, remember to always head over. We want to make it more clear, but we do publish a lot, almost every day, every couple of days, of the new updates, any interviews that we're doing. Remember to always head over to the blog section where you can get the recordings, new features, and anything that we're up to as well, and any of those features. So remember to check those out. And then we've already been through some of the pitches, Edge, DX Exchange, and Concrete. If you head over to the last 3 episodes of Bank to the Future Live, then you can get an update on those pitches and get an interview with the founders and CEOs. And if you ever want to ask any questions, then if you're a qualifying investor, head over to the forum. It will take you through to the investor zone where you can get your questions answered. So, Famida, hopefully we've got some questions and different things that we can go through. So I'm handing over to you, and I'm just going to put my screen back on while we sort through some of those questions.
Okie dokie. Right, bear with me. So, I guess one of the concerns here is, how was that page found on the coin payments support page? Because a lot of them, obviously, a lot of our users were doing their research just to see where these fees are coming from. And coin payments doesn't exactly have the easiest way to navigate and find that page that you specifically just shared. So how is it that we found this page?
Well, simply because I'm not sure exactly where it came from. We can share the link. But because this is the Bank to the Future token, the ERC20 tokens, I believe this is a page that anyone can see. But yeah, I think that they have some things to work on. I think because they're adding thousands and thousands of tokens over their time frame, and they're the largest, they support more tokens than any other provider, then they probably need to make some updates to their user experience so that these things can be found easier. What we wanted to do is just share the link to show you that we didn't just make up that 1% fee. That is on the website. That was the fee. But yeah, I'm not exactly sure. I was shared the link. It was someone from my team that shared this link. So not exactly sure where it's displayed, but we'll make sure that we display it way more transparently. And we'll also give that feedback to the coin payments team as well.
Great. Okie dokie. Let's, I'm just going to quickly go through the live chat, see if there are any questions. There aren't actually any fee questions because you've actually covered everything that's necessary to be covered. Okay. But I have a question. Why is it that we are using coin payments and no other third party?
There are no others that actually do all the tokens that we want to support. For example, BitGo doesn't support Tether. So we couldn't use BitGo, so the industry ends up having to use some here, some there. We wanted one that could take care of all our needs rather than managing multiple integrations that lead to more confusion, multiple fees, and multiple challenges, really, and more attack vectors when you're managing too many of these different. And coin payments have always been collaborative with us. They've released features that we've asked them to, and we have a much stronger relationship with them. We just had a breakdown in communication that's led to this unfortunate situation, and we're looking to work with them, and they've already shown how invaluable they are at trying to address these situations and accommodate our investors' needs as well.
Okay, so I'm just going to take some questions here from what we've been building up for the last couple of weeks. There are more general questions now.
Okay.
So
if we've beaten to death the fee issue, hopefully it's clear. And we'll also release a post that goes through these and all the conditions and everything, so it's crystal clear.
Great. Okay, cool. So let's go through these questions now. What is the difference between the qualification requirements of an investor and a company?
So it depends on your jurisdiction. I hate to give those questions, but I can't give blanket answers for every country because that would last for over an hour. We've taken the time. So there is this concept of, let's take, for example, I'll take a couple of countries. Let's take, for example, the US, which is the requirement to be an accredited investor. That means that you have to have $1 million worth of assets aside from your primary residence, or you have to have an income of $200,000 or a joint income with your partner of $300,000. That is the requirement for an individual in the US. But there's also for a company. If you want to be a company, there's different criteria. At the moment, if you go to BnkToTheFuture.com and you create an organizational account, if you're in the US, it will list all the different criteria of which types of companies can invest through the platform. There is a requirement to either be a certain type of institution or have net assets within the company of $5 million or more, or all of the directors of the company to be accredited investors, and there's different types of requirements. If you are from a different country, for example, you might be from somewhere in the European Union, then there are the concept of a sophisticated investor, which is demonstrating that you can meet certain requirements in terms of your sophistication and understanding of the product. Then there is high net worth. There is income, professional investor. Each country has lots of different definitions of who's able to invest in this asset class. And the main requirement, though, is that the directors of that organization either have a net asset requirement in terms of wealth, or the directors meet the qualification criteria. I'm just going to have a drink. My voice is going. Excuse me. Have you got another question for me?
Well, yeah, it's looking a little bit hot over where you are. So, okay, cool. Let's go for another question over here. Right. So I'm a new investor. Can I invest in security tokens through Bank to the Future?
Any qualifying investor can register to our platform, and we have lots of different types of products on our platform. There was an episode of Bank to the Future Live where we went through every type of investment product, whether that be a convertible note, whether that be equity, whether that be a security token, whether that be a simple agreement for future tokens, a simple agreement for future equity. Whenever we release a product, then we put it on the platform and we explain what type of product it is. We have done a couple of security tokens. The demand for security tokens is not incredibly high at the moment, but it is an ecosystem that is being built. And so we will do more and more security tokens. We will also have some very exciting news in terms of a new acquisition, a new partnership that we will be announcing in the coming weeks, which allows us to do a lot more advisory work in a regulated environment for those that want to do issuance of security tokens and take things to the next level in the security token market. So look out for future episodes of BF Live and future announcements on that. Also, the way that we're building our identity solution is to allow people to invest in those security tokens either through Bank to the Future or through our future Bank to the Future exchange, or even other self-hosted security token offerings using our Bank to the Future identity solution. So it's worth getting your account set up, and we are in the next couple of weeks making the next release for our Bank to the Future identity solution, which is designed to allow you to invest in the security token ecosystem by signing up at BnkToTheFuture.com and then being able to port those accreditation, know your customer, and all the other requirements and broker onboarding into investing in other parts of the security token ecosystem. To give you a background, the first time a token sale was conceptualized was around 2013 through the Mastercoin, which is the protocol that Tether uses on Omni now. That was the first time it was conceptualized, and that was around about 2013. It wasn't until 2017 that there was deep liquidity in the ICO token sale market. And so you can look at a 4-year period. If you look at the security token, that was really conceptualized in the 2018 market. So you could expect, I think, security tokens to become a deeply liquid thing as a 2021, 2022 market, should history be an indicator of future projections. Excuse me. In terms of what we're doing, we like to invest in the growth of the ecosystem before it becomes big. So at Bank to the Future, we were putting opportunities to invest in the crypto exchanges like Kraken, Bitfinex, Bitstamp, merchant processors like BitPay, and many other companies that went on to become very large. But we were putting those deals on the platform when they were, not really established. And we like to invest in the growth of the cryptocurrency ecosystem before deep liquidity arrives. So we're doing the exact same thing with the security token opportunity right now. We have exchanges like DX Exchange. We have deals like Concrete that are getting into those markets. We have other deals that we've done in the past, like Securitize, Lottery.com security tokens, and various other deals. The stage that we like to put them on the platform is trying to forecast a future growth market. Now, you have to make your own investment decisions about whether you agree with that or not, and whether security tokens are going to become a deeply liquid big market. We are unable to give financial advice. All we're able to do is put opportunities that decent investors are investing into and allow you to co-invest with them, provided you're a qualifying investor, and build a portfolio, diversify widely. That's what Bank to the Future does.
All right, so we did actually get one question come through in the live chat, and it's about Brankas. Why was it such a fast finishing pitch?
So Brankas, we had only 3 days to do it. The reason for that is because we had pro rata rights because we were seed investors in the Brankas pitch. And pro rata rights means that they secured a Series A investor, a venture capitalist, and they give us the opportunity to reinvest at the same price. So what we do is we allowed all of our existing SPV investors to exercise pro rata rights and reinvest at the same price. After that, we opened it up to our priority access deal premium members that are holding a minimum of 10,000 Bank to the Future tokens on their BnkToTheFuture.com account. And any excess demand was able to go to those. We then were able to do that, but we had a 3-day deadline because they needed an answer from the investors on how much they were investing so that they don't lose the VC investor and they get to close within the time frame. Once you get a VC investor, you don't want to actually delay them for a long time, because anything can happen and they can change their mind. So Brankas wanted to ensure that they could get us in. And so we only had a 3-day time frame. Our pitch management team turned the pitch around as fast as humanly possible, got that signed off. But we were only able to have a short time frame. If you miss that and you still want to invest, we cannot accommodate you. We'll certainly put you onto a waiting list. And if we get any extension in the time frame, do let support team know ASAP. They will report that to our pitch management team. And if there is an opportunity for us to increase the amount, then we'll try and accommodate you in any way we can.
Thank you. So another question that we have is about the Telegram tokens. When is it possible that our investors can start selling these tokens?
Well, the people that purchase the Telegram token, we have an investor zone. And in that investor zone, we're passing on every update that we get. We've been receiving an update approximately every month from the Telegram team, and we're putting those on there. We do not have insider information. We are passing on all the information to the existing investors. So we gave some speculations on some of the things that are happening in terms of people selling on their tokens through secondary trades, which I'm not sure how they're doing because it's a breach of the terms and conditions when investing. And I know that that could cause issues. So I'm not sure exactly how these things are happening, but I believe they're happening through unregulated exchanges that are doing them anyway. And so be careful. And there's a lot of scammers out there, and it might be fake. It might not be real. So be ultra careful if you're doing these on the secondary market. But what we will do is we will, as soon as we receive the tokens, we will release the tokens. They'll be on your BnkToTheFuture.com account, and you can then request a withdrawal. As soon as they're on an exchange, then you will be able to withdraw them to that exchange and do with them as you choose. Put them on your own wallet, put them anywhere. Yeah, you'll be able to withdraw those as you choose. I'm sure that Telegram Gram tokens have sufficient interest for many of the top exchanges to want to support them, but we don't know that.
All right, so since we're on the topic of tokens, let's talk about BFT. A lot of people are actually wanting to know about the rewards scheme. When will we start something for our premium members?
We have actually been doing a lot of innovation and reinventing the original idea of our reward scheme. We wanted to, originally the idea was to give rewards for due diligence and investor relations. When we started reaching out to our existing pitches and saying, trying to reward them for giving effective investor updates, we didn't get much traction. There was no interest because the reality is the entrepreneurs are just damn busy. They're fighting a million fires to try and get their businesses moving and deliver for their investors, and receiving some tokens is just simply not a major interest to them. So we considered that a failed experiment. We then also wanted to introduce rewards programs for companies engaging in the community, and we looked at other platforms that were doing that, and we noticed that really it just creates spam. And starts to attract, people that may not necessarily be contributing to the community and giving, updates that are just irrelevant and not really adding much value. So we are open to finding an effective way to do that, but the original ideas in the white paper were just simply not really effective uses of the token from what we tried to do. Having said that, we think that there is a really good reward scheme in that most of our investors they wait till the end of a pitch to invest. But if they were rewarded for investing earlier, then we think that that's a really interesting use case for the Bank to the Future token. We don't have the resources in terms of all of the things that we're trying to achieve right now to build that out. It's not quite in the roadmap, but we've added it to the Trello board of an idea that we would like to explore and start rolling out. And we do want to actually use the reward scheme to reward our premium members, frequent investors, and we're doing some innovation around exactly how we can execute that. The bottleneck is always, we have a huge list of things that we want to do that our investors want to see, and we have only so much dev time in order to action them. So we have to, manage when we implement something like that, just because something else has to go. So we need a more effective mechanism for getting real feedback in terms of what features our community would actually like to see, as opposed to a couple of people. We've got several ideas for how to execute that. But we do, please do share your ideas, what you'd like to see. And we do review all these things.
Cool. So I think we've only got a few more minutes left, and I thought I'd just kind of leave it on a really nice feedback, which was our videos and interviews by you, Simon, have been really good. People have really enjoyed it. It's obviously switched up from what we normally do. But some of the feedback along with it's been really good and enjoyable. They do want to hear a lot more around BF token and I guess how we're marketing and what we're doing going forward. So I guess maybe if we can give them an insight of what to look forward to next week on our live.
I don't want to commit to something that we're not doing. You threw me a little bit off guard. We will. We're actually trying to line up an interview that coincides with a deal and acquisition we're trying to do at the moment, but I don't want to commit to that next week unless it's actually happening, because a million things can go wrong in these things. One thing we've always tried to do is we love to give updates, but the speed of the crypto market changes so fast that the last thing we want to do is state something when we are not 100% when we can deliver it, and end up, over promising and under deliver is the thing we always try to avoid. We'd rather under promise than over deliver. And we have a lot of initiatives that we're currently working on. The market is, in interesting times. In terms of if you want to get economic updates and things that we're doing, that I believe about the economy, that are my personal opinions, then I've been releasing a lot of content in my own YouTube channel, which is Simon Dixon, and my own Twitter feed at Simon Dixon Twit. But these are not the views of the company, and we have to draw a fine line between, this is just the show for our investors. Updates on the Bank to the Future token, the Bank to the Future platform, the new products that we're releasing, Bank to the Future ID, Bank to the Future Exchange, Bank to the Future Wallet, and the ecosystem we're building, and other things that we've got in the roadmap. One thing we are 100% committed to achieving is that we are thinking of the Bank to the Future token in all we do. We're not the fastest at what we do, but it will be integrated into all we do. And eventually we will make sure that it is integrated. And then the market needs to determine whether this is a highly demand and highly sought over thing. We don't want to market things just for the sake of, at the end of the day, when you have a token, the value of the token is part of its usage. And our job is to create as much utility and usage for it, because it's an incredibly useful thing to have as a company, to be able to utilize in all of the different parts of our ecosystem, as well as other people that want to utilize that. It's always at the front of our mind. One thing that we have proven is that we hang around, we go through all the different trends, we go through the ups, we go through the lows. When we get it wrong, we try and address it. We're here. We're not as, sometimes with the situation, not as transparent as we would have liked to have been. But when that happens, we take your feedback. We get on a BF Live, and we try to address the situation. So thank you for that feedback. Famida, thank you for picking out those questions. Sorry for my voice collapsing halfway through the broadcast. But that's going to do it for episode 28 of Bank to the Future Live. And we look forward to seeing you in future episodes. Please do subscribe. Please do hit that bell symbol so YouTube notifies you every time we go live. Follow us on Twitter at Bank to the Future. We are also on Facebook if you like that. We have a Facebook page. And use the different hashtags, Telegram channels, and let us know what you'd like to see. And we also have the investor zones when you want updates and want to communicate on different aspects. So we look forward to seeing you in the next episode of Bank to the Future Live. Thank you.